Welcome to all of the panelists. Following the venture panel, which you heard earlier this morning, we'll look at other segments of the financing environment now. For example, crossover investing has taken over a new role in recent years and has become a critical part of the financing landscape for gene and cell therapies. Everyone's bios are in the program, so let's get to it. So I'd like to start with a round robin with each of the investors, maybe starting with Oleg. Let's start big picture. So what big themes are you and or your companies thinking about in the area of gene and cell therapy?
Sure. So there's a number of different themes we're looking for. Probably the biggest one is enabling technologies. We've seen kind of a first generation of gene and cell therapies funded over the last few years. I think we know where the opportunities are in terms of technologies that need to be improved upon, and that's really where we're focusing most of our time and effort.
Great, Ellen.
Areas where we want to. I totally agree with Oleg. We want to go into areas where there's improvement, but also into areas where there's been proven technology, where we know, for example, in gene therapy, where we know we can transduct. Like I'm very interested in cardiac gene therapies right now because, Rocket has shown that they can get good expression into the heart, for example. So I like following the science and maybe being fast followers to, areas and delivery mechanisms that we know now work.
Great. Peter?
So I think that the space is getting fairly crowded with a lot of programs, which is great in that you get some data that shows what could possibly work. And what we're really looking for are technologies that make us feel like, given the space they're targeting, the disease they're targeting, that they are future-proofed against disruption by someone doing it even better and more cleverly, which is a little bit hard to say that this is the last clever company, to come along, right? But those companies that have a great technology and then say, we're working on better. If anybody's going to disrupt us, it's going to be ourselves. We find that compelling.
Great. And Deep?
So, we believe it's a very young field still, with the first gene and cell therapies just being approved in 2014. And, as we know, the field of biologics started in 1980s, where the first set of companies with drugs and market came only about 20 years later. So we think it's still very young. The major themes that we have as reflected in our investments like Elevate and Encoded is really one around manufacturing, because it's still very complex to manufacture these things. And the second is, how do you have higher payloads in your viral vector efficiencies?
Great. And as you think about gene and cell therapy relative to other biotech investments, do you feel like gene and cell therapy is unique? It has different attributes. It's something that you look at as a special category, or is it quite similar to how you think about biotech generally? So Oleg, maybe we'll start with you again.
Sure. So, the biggest difference is obviously that with a lot of the traditional investments we make, there's still a massive biological question that needs to be answered. With a lot of these cell and gene therapies, it's really, that question's been answered. We know a lot of these modalities work. It's really an engineering issue to figure out how we can make them effectively and in a way that, the FDA will approve these drugs. So, to echo what Deep was saying, focusing on ways that these various products can be manufactured in a cost-effective way so that patients can actually afford them is a pretty big deal.
Got it. Ellen, your thoughts?
Yeah. So I really think that all of my investment decisions, my favorite investments are ones where we understand the underlying cause of the disease. We understand, how far along that disease process has gone. And then we have a tool that matches that, that we can modulate that disease process in the best way possible. And so often those tools can be cell and gene therapies. And I think as cell and gene therapies get more widgets and get better at delivery, which I really think is a huge challenge for the whole field, there will be more opportunities in that field that fit that kind of general investment philosophy. So I don't actually think it's any different than anything else. I like to understand the underlying cause of the disease and then find the matching tool for it. It's just that more and more we're going to be able to have cell and gene therapies be the matching tool.
Great. Peter?
Maybe just to narrow in a little bit, like when I think about ex vivo gene therapy, oftentimes the challenge is the conditioning regimen, right? So in that case, the technology doesn't exist in isolation. It exists in the context of an entire intervention. And so if it's possible to improve that, the conditioning up front to mitigate the need for it, that makes the gene therapy itself that much more attractive, but that may require products, technologies that are separate from what you're good at, separate from the cells themselves. So that makes, at least ex vivo gene therapy different from a lot of other modalities, but not radically different, because really, in many cases, drugs can be combined with one another. So you always got to keep a lookout for what does your drug as a tool fit with, what toolkit does it really belong to?
Great, and SoftBank goes beyond biotech into other technologies as well. So I don't know if you want to comment on gene and cell therapy relative to biotech, or also your other investment spaces as you think about this.
So, obviously, as we've moved through small molecules to biologics to GCT, the interest in pharma and therapeutic areas in the VC community has just gone up substantially. And just last year, $5.5 billion were invested in GCT alone, which is pretty tremendous. And so I think that, all the things that Ellen, Peter, Oleg talked about will advance at a much faster pace. And what we look for is really, potential for programs that have wide-reaching impact that can be delivered cost-effectively and quickly to as many patients as possible. And we would invest in those.
Got it. So Oleg, you had mentioned, thinking about the role of crossover investors and how, perceptions may have shifted over the last couple of years. Just curious on your thoughts on, the crossover round, what it is today versus what it was a few years ago, and how you view the field and how you feel it's viewed.
Sure. So, I guess by the strict definition of it, the idea of a crossover investment is investment in a private company where the next round of financing is likely to be an IPO. We take a bit of an issue with that term crossover, because I think there's implications behind it that aren't necessarily the most positive for investors. For example, I think some folks think that crossover investors maybe do less diligence than traditional venture investors, or maybe require less control provisions like board seats or other things like that. When we underwrite private companies, we don't assume that the company is going to go public on the next round. I think that's a kind of a dangerous way of investing. So we're perfectly happy if the company stays private, goes public. That's not really relevant. It's really just another financing event. And just like everyone else on this panel, in terms of this group of folks, we do quite deep diligence and really want to understand what we're investing in. I think as we've seen in the market, especially going into the end of last year, maybe things got a little bit ahead of themselves in terms of folks getting excited about some of these technologies and modalities, and with this drawdown over the last few months in biotech, this 30% drawdown, I think we're kind of seeing the outcome of that. And hopefully, most of the investors who come into these companies really understand what they're invested in, and if you liked it when you invested, you should like it that much more at a 30% discount.
Great, and Peter, your fund actually spans the whole range from venture to crossover, later stage investing to public. I'm just curious how you're thinking about stage these days.
So to me, stage is always about the degree of validation of the underlying technology, and has nothing to do really with the round that you're doing. You could do a Series A IPO if you wanted to. But, that's been done around more advanced programs oftentimes. I think that what we're always mindful of is a company insulated from the ups and downs of the market? Right? It doesn't have to be insulated over the course of its entire life, from preclinical to FDA approval, but you do have to insulate the team during whatever the next phase is of value creation, right? So if the key is to demonstrate that this target really does is relevant to disease, and you've got a drug candidate, and you want to get to a phase 1 biomarker result to prove it, then how much cash do you need? How much cushion do you need? And how can you make sure that the company is funded? You don't have to put it all in at once, but when you build out that syndicate, you want to bring in investors that have a track record of honoring their commitment to keep that company going, right? So when people come into a crossover round, there's an understanding that either they're good for some more money in an IPO, or as Oleg pointed out, they're not so wedded to the idea that it's got to be an IPO, but they will support the company. And I think that that's not a widely understood definition. I think people think that, oh, we're just going to get a bunch of public investors, and they'll give us money for an IPO guaranteed. And what you end up with is people who invest in your crossover and consider it an option that maybe they might want to put in more money later. And if the markets turn and they say, now we change our mind, then you've just introduced instability into your financing strategy. So I think companies shouldn't get too wedded to the conventional notion of crossover, and just focus on making sure that they're stabilizing themselves through some reasonable period of time, oftentimes a couple of years.
Great. And Ellen, a lot of money has gone into this sector, particularly in gene therapy, but other spaces as well over the last few years. And you do see the crossing over into the public markets at a much earlier stage than you did just a couple of years ago. Are we at a saturation point here? Is it overinvested? Are we just getting started? How do you feel about the level of investment that's gone into gene and cell therapy relative to the opportunities?
I mean, the investment drives the science, and the science drives the investment, right? You need both, and there's going to be failures. It's drug development. We got to all be honest about that. It's still, a measly 10% probability of success when we're in phase 1 in order to get to an approved drug. So that's just the nature of the whole industry. That's true for cell and gene therapy. That's true for small molecules, antibodies, any technology. The crossover space has been very busy. It's been very successful for a little bit, and now the markets have pulled back, and it's not. And I think it's a great reminder for everyone to do what Peter and Oleg was talking about, which is it's just another financing event. Make sure that financing event can get you to the next value inflection point. Because if you can get to the next value inflection point, then it doesn't matter when you do the IPO. Is it a month after you close your crossover, or is it after that value inflection point, which frankly I actually would prefer, because then you can justify that step up, and you're not just diluting yourself further and arguably doing 2 financing rounds when you could be doing 1, which is one of the arguments we make sometimes for companies actually reverse merging into a SPAC. So I think there's a lot of different options. I'm kind of dodging your saturation question a little bit, but we're all big boys and girls, and I think we need to understand that there's going to be failures along the way.
So sticking with the saturation question, Deep, do you have a perspective on that? Are you really excited about putting more money in this space, or are you more cautious than you were a year or 2 ago?
We've probably done more life sciences deals this year than we did in the last 2 years combined. So we are absolutely excited, and we are in the process, even after this pullback, of deploying more capital in the space. I have a slightly different view on these stages, as many folks have already said. Life sciences is a very long-term game. Like drug therapies, it's not like building a LinkedIn or a Facebook where you have a website and, within a year, if you're going to be a massive network or you're not, right? It's a 10, 12-year process. And I think it behooves entrepreneurs to always find the right partners for themselves who can be with them all throughout that process. We have invested in effectively incubation deals like Weir Bio, where we were the first money in alongside Arch and the second largest owners, all the way to investing in Seer when they went public, and then its follow-ons and everything in between. So we don't view ourselves as crossovers or early stage or public market investors. We view ourselves as, believing in companies and teams and the right modalities that they're going after. And we want to, back them so that they can bring those drugs to market. That's, the one thing we have to talk about and believe that both the founders and the investors in this space are very mission oriented. Like we are here to really make an impact in patients' lives, not just like have more people click on ads, right?
So it would be tough to have a capital formation panel these days without talking about SPACs, since they have come up a couple of times, and obviously there's more of them than there ever have been in the past by far. So anybody want to raise their hand with a perspective on SPACs, good or evil, too many, new financing event that's going to be with us for a long time? Any thoughts?
I might take that one. We've been in the SPAC space ourselves, and we're found an amazing partner in our first SPAC in a company called Nuvation, a seasoned biotech entrepreneur, David Hung, who had very successfully brought a couple of drugs to market and sold his previous company to Pfizer. And I think what the incentive for an entrepreneur like David was that a SPAC is a hyper efficient financing tool. And that's really all it is at the end of the day. So for a fund like ours or Peter's or Ellen or Deep, it's really just another way that we can help a company raise money. In this case, you can raise the amount of money that it might take a company 2 or 3 years to raise, all in one fell swoop, and let management really focus on what they should be focusing on, which is developing drugs for patients. So that's how we view it. And I think when you see the negative headlines about SPACs, they're really not talking about folks like us who are investment professionals. They're probably talking about guys like Sammy Hagar, who's awesome, but maybe shouldn't be in the SPAC space.
Got it. Anyone else have thoughts on
that? Let me try and take the other side of that, just to pressure test this, because we have a SPAC as well that's merging with a company. We have a second one teed up in case we find another company that would be a good fit for it. But conceptually, what I found is most companies that are interested in a SPAC, when you pressure test why, their financing needs could be perfectly well met with a standard financing. And we've seen standard financing range, across a wide spectrum, from $10 million to $500 million. So it's hard to say that you can't just raise the money you want with a standard financing. So Oleg, what would you say is, the truly, unique feature of SPACs? What does it really solve for?
Well, like I said, I think it really does. You're right in that it is absolutely possible to raise whatever amount of money needs to be raised. But if you're a management team that doesn't know investors, for example, that hasn't spent the time with investors, it'd be a lot harder to do that. If you're a company that's not down the middle of the fairway, maybe you're a European company or you're working in a therapeutic area that's not popular, even various cell and gene therapy modalities, it might be harder to attract investor attention because, unfortunately, investors tend to be like lemmings and all kind of focus on the same stuff. And I think that's where the SPAC fits quite nicely, because it forces everyone to focus on one particular idea for a very brief period of time and decide whether they want to fund it or not. And often a SPAC already comes with that group of investors that you would have, that a management team or an entrepreneur would have spent the next half decade trying to collect. And here they are delivered on effectively a silver platter all at the same time. So that's where I think it really fits nicely. I think where it falls down and where we've been disappointed in some of the deals we've seen from other folks is, a private company that we may have looked at and maybe weren't that interested in a certain valuation, and then they come back knocking on our door at a 2 or 3x value to that in a SPAC. And so I think it's just like this idea of crossover investing where, maybe that's gotten a little bit of a bad name of late in terms of what the assumptions are behind that.
Great.
It's so important to stay diligent. That's such a theme we're hearing here. We got to stay diligent on the science. You got to stay diligent with the valuations, whether it's a SPAC, whether it's a crossover, frankly, whether it's an IPO and the step up that you're demanding on that from, the crossover round, which may have been overvalued. I kind of view a SPAC transaction often, or the ideal one, as one that combines that crossover round and that IPO round. So, there's certainty of execution. You're distracting management less. You can sit around the table. You can allocate the IPO exactly like you may want to the right investors. There's still a bank involved. It's still an M&A transaction, but you don't need to, give stock to those clients of the bank that you might not want to. I know there's other ways to do that. I know Peter's itching to talk about Series I, I'm sure. But there's a lot of different options, and it's so good to have more financing options for companies. Why not have a boardroom conversation and say, okay, should we do Series A? Should we do a SPAC? Should we IPO? Should we do a crossover first or not? Do we need it? Banks, frankly, have become afraid to take a company public if the IPO isn't fully allocated and fully spoken for before. That's why the crossover rounds exist. And I think, we launched the first healthcare SPAC, and one of the reasons we did was because we wanted to end that. We thought that was just unfair and unnecessary, and didn't always, the financing didn't always match the needs of the company. Instead, it was the requirements of the bank. And so having another option out there, I think, is always healthy for the ecosystem. But we always have to be diligent.
And
I think you put your finger on it. I think that was it. It's a financing. It's essentially a public financing that is much more influenced by the judgment of the lead investor. With banker support, but it's an investor that really leads it. They pull together a kind of hunting pack, if you will, of peers, people who they know, people that they've collaborated with before, and those people can still opt out. And we're in the early phases, I think, of the SPAC business to find out, will people exercise that right to opt out? If they've seen that deal before and they said, like, I'm not investing at that valuation, and then they're brought that same deal at a higher valuation, it would be rational for them to opt out. What we've seen is sometimes they don't, right? They don't opt out. And we ourselves have been under that pressure. And we thought, maybe our peer's right. Maybe we could support and we can dial in our skepticism by not investing as much as in the pipe. But, you're not always right about the things you pass on, right? And so there's a bit of that, all right, let's collaborate on this SPAC together. In the case of a standard crossover round, somebody leads a deal and then people opt in. So this is our test of the opt-out process, right? I think we're in the early innings of figuring out how that works through various market conditions.
Great.
Yeah.
So, we only have a couple of minutes left, so maybe we'll finish up by talking about, focus on something that you're excited about, whether it's a technology area, a financing angle, those kinds of things. So, start with Deep, perhaps. What's something that you're particularly excited about right now?
Besides gene and cell therapies, I think the other area that I'm super excited about is multi-omics. I think there's just so much that we are learning about the human body and ourselves, and as a result, disease modalities and how we can cure them by bringing in a different vectored approach. I'm an engineer by training, and you want to examine the system in every possible way you can, and multi-omics gives us that ability.
Great. Oleg?
We're quite focused on enabling technologies in this space. So I think there's a lot of really neat, innovative ideas from academics or very early stage founders. But I'm not sure that a lot of those folks are going to have the capital or the know-how to actually make the products that they're developing. And so some of these companies that have formed, like Elevate that Deep mentioned earlier, that are really focused on enabling the manufacturing and the process development for some of these cell and gene therapies. I think that it's an amazing moment in time for those types of companies.
Great. Ellen?
Yeah, I totally agree with that. I think enabling technologies are important. I also think new technologies in this space that are focused on delivery are really important. I've alluded to that before. There aren't that many ways we can do that safely right now. And I know we're hitting some roadblocks in that space. And so I'm really looking for something. I'm not saying I've found it, but I really want to find something that's going to solve that problem.
Great. Peter?
I'll echo what Deep said. I think multi-omics is a remarkable field. And if it can really allow us to screen for diseases much earlier, it completely changes the way that we intervene, especially in cancer. A combination of early screening and even surgery or adjuvant therapy, frankly, might put a whole lot of treatments that are targeting metastatic disease out of business, and that would be great. We'd all be better off. on gene therapy, like AAV and things like that, we're really interested in redosability. It'll be an interesting nut to crack. And there's many ways of going about it, like not even using AAV for starters.
Great. Well, thank you. I really appreciate everyone. This was an incredibly informative panel, so really appreciate your time.